Okay, let's talk about something that drives business owners crazy. You look at your profit and loss statement, you see a nice, healthy profit, and you think, great. But then you check your bank account and where did all the money go? It is one of the biggest, most frustrating mysteries in business. Today, we are going to solve that mystery once and for all.
Right? This is the big question. Your books say you're doing well, but you feel totally cash-strapped. It's like some kind of magic trick where the money just vanishes. But here's the thing, it's not magic. It's just a story that one report, the P&L, doesn't tell completely. To get the full picture, you need a different tool.
And here it is. Say hello to the cash flow statement. This report is your financial detective. It doesn't care about theoretical profit or future payments. It cares about one thing and one thing only: actual, hard cash moving in and out of your hands. It tracks every single dollar, showing you the real, tangible story of your money.
I absolutely love this analogy because it's just so perfect. Think about it. Your profit and loss shows your performance over time, and your balance sheet is like a snapshot of what you own and owe on a single day. The cash flow statement is the bridge between them. It connects the two and explains how your activities actually affected your cash balance from the beginning of the period to the end.
So how does it actually do that? Well, it's pretty clever. It breaks down every single cash movement in your business into three simple logical categories, or channels, if you will. Once you get these three channels, the whole statement just clicks into place.
And here they are: operating, investing, and financing activities. You can think of these as three different buckets, and every cash transaction your business makes, literally every single one, gets sorted into one of these three buckets. So let's take a quick look at what each one actually means.
First up, you've got operating activities. This is the engine room of your business, right? It's all the cash that comes from your core day-to-day operations. What's cool is it starts with your net income from the P&L, but then it makes these really important adjustments. For instance, if you made a sale on credit, that's profit, but you don't have the cash yet. This section fixes that, sorting out the theory from the reality to show you how much cash your operations actually generate.
Next up, investing activities. This bucket is for the big moves, the long-term plays you're making to grow the business. Did you buy a new piece of equipment? That's a cash-out investment. Did you sell some old property you weren't using? That's a cash-in. It's all about how you're using cash to build for the future.
And last but not least, financing activities. This tracks the flow of cash between the business and its money people, so its owners and its lenders. If you, the owner, put some of your own money into the business, that's cash in. If you took an owner's draw to pay yourself, that's cash out. And this is a big one. When you pay a loan, the part that's paying down the actual loan principal, not the interest, shows up here as cash leaving the business.
Now, before we look at a real example, here is the golden rule. It's so simple, but it is so important. If you see a positive number on the statement, it means cash came into the business. If you see a negative number, or a number in parentheses, it means cash went out of the business. That's it. Keep that one rule in mind, and the whole thing becomes crystal clear.
All right, enough with the theory. Let's put this into practice and see how it works in the real world. We're going to walk through a sample company's cash flow statement and decode the story that the numbers are telling us.
Okay, so here's the full statement for our company for 1 month, April. I know, it might look like just a wall of numbers, but don't worry. We're going to walk through the most important lines together and see if we can solve that profit versus cash mystery for them.
Okay, let's start right at the top in the operating activities section. See that first line? Net income, $4,100. That number is pulled directly from the bottom line of the profit and loss statement. That's our starting point. That's the on-paper profit the company made. But here's where it gets interesting. Look down a few lines, and you see that total cash from operations was actually $5,200, which is more than the net income. How does that happen? Well, if we look closer at the full statement, we can see the company collected some sales tax it hasn't paid out yet and used a credit card for some expenses. Both of those things mean more cash is sitting in the bank, at least for now.
So the day-to-day operations actually brought in a good amount of cash. So where did it all go? Let's jump down to the financing activities section. And boom, this is where the mystery unravels. We see two big negative numbers, cash flowing out, a $5,000 owner's draw and a $400 loan payment. That's $5,400 in cash that walked right out the door to pay the owner and the bank.
And here's the bottom line, literally. When you add up all the cash flows, that positive $5,200 from operations and the negative $5,400 from financing, what do you get? A
a net result for the month of negative $200. So even though the company was profitable, its total cash position actually went down. We're getting so close to solving this.
And now for the final aha moment. This is my favorite part. The cash flow statement always finishes by tying everything together, leaving absolutely no doubt about where every single dollar went. Let's watch how it all reconciles.
And here it is, plain and simple. The business started the month of April with $5,700 in the bank. We just figured out that its net cash position decreased by $200 over the month. So you take the starting cash, subtract the decrease, and what do you get? $5,500. It matches the ending bank balance to the penny. Case closed.
And that right there is the true power of the cash flow statement. Knowing you're profitable is great, it's essential, but it's only half the story. This report gives you the other half. It shows you the actual decisions you made with your money, paying yourself, paying down debt, buying new equipment. It shows you how you used the cash you had.
So the real takeaway here isn't just about some sample company. It's about your company. If you're feeling that disconnect, that frustration between the profit on paper and the cash in the bank, this statement holds all the answers. So I'll leave you with this question. What story is your cash flow telling you? Is it a story of healthy growth, or is it pointing to hidden problems? Now you've got the tool to find out.